Hello guys, welcome back. So now we're on tax on sales purchase. So here tax on sales purchase we have done with the configuration part, guys. So in configurations we have created a tax procedure, right? So the tax procedure we have created, and I think we have created the tax code as well. I don't know whether I have created or not, that I'll check it. But tax procedure we have already created. In order to create a tax procedure, you need to have condition type, you need to have account key, that is called transaction key, right? And then GL accounts, these all things we have already done earlier. Now we'll do one thing, guys. So let me log in first. The server is little bit slow, I think. I don't know if it's mine only slow or for everyone is slow. So now, so first of all, guys, whenever like even when you're going to practice this tax on sales purchase, let's suppose if you have to post any transaction, right? So what you have to do, first of all, you have to check your tax procedure, whether your tax procedure is assigned against your country code or not. So what we have to do, OBBT is the transaction code. Click on position, country, and here it's TM33 that I'm going to assign. Then after FTXP is the transaction code by which we have to create a tax code. Guys, tax code always it is required because it's tax code itself by which tax percentage is going to be calculated. Always, whether it is direct tax, indirect tax. Tax percentage is being calculated with the help of tax code only, right? Give your country code here. And I think we have already created certain tax code. Yes, we have already created certain tax code. So now, okay. So this is input and we are having view. Okay, so input only we have created, output we have not created, right? And there is a logic behind this input and output, guys, that I have already explained in the previous session, right? Why do we need to select tax type, right? So let's suppose A1 is input, that is already created, right? Data can be displayed blocked by user. Some user they're using the same. It's okay. Now 6%, 6%, right? Tax procedure. Now A2, that is also created. Now if I make it V1, V1 does not define free code. Okay, so this is only okay. SMTL. Some noise might be coming, guys, because of this certain marriage is happening here. So people, there might be some noise of firecracker. However, my what is it? This one is there. Sound filter is already activated, so intensity will be quite low. Why it is, guys? A1. It's okay. Still, it is Essential. Again, somebody. What is this? If I use. So V1. Okay. So this is output, right? And tax type B. What is the use of tax type, guys? That I have already explained, right? Tax segregations are required. The reason behind is in GL account level we are having this control so that in order to avoid, like while posting a transactions, let's suppose instead of input tax, if you have selected output tax code, right, then a wrong GL is going to be the wrong in wrong GL the transaction is going to be posted, right? Now, so output 12% CGST and SGST, 6 plus 6, save it, and even you can create IGST also. Here 12% alright. Okay, so we have created the tax code. Now what to do, guys? Go to FB70. Okay, so before that, what is happening, guys? Now, as I said, you go to FS00 and here, like let's suppose sales revenue, double click. So now what is happening? Now here, since we have created, so look at here, the tax category. You have to give your tax category, right? So I have specified only output tax allowed. So whenever I post any customer related transaction, guys, right? And by mistake, if I'm going to enter here, now let's suppose I'll give a customer number here. This is the customer, right? Any amount. Okay, there is one more thing. Now here, guys, tax code. So if you select, like here, you select the tax code. Now look at here. This is input. This is the output, right? Oh my god, this is like, okay, this is not my tax code, guys. A0, V6, V0. It means what is happening? Someone, who is that? Okay, go to slash N and here OBPT IN tax ZN. Who is this tax ZN, guys? Is there anybody using this? Just give me a second. So I'll just do one thing, guys. TM33, let me save it. And then here, FB70. Okay, so now here, Look at here, my tax code is appearing. So anyone, if you select this one, number range 04 is missing. OBBC, right? Not OBBC, guys. OBA7. Everything is fine, guys, or any noise is there, because here some noise of certain band party will be there, because as I said, like marriage is taking place here. Never. Okay. Okay, so first of all, here I'm going to give, let's suppose A1. Here also you can select this A1 and click on calculate tax. So two things are there, guys. First of all, generally what happened, look at here, calculate tax on net amount. So you save it first. And then, so generally what will happen, now here, if it simulate, then what is happening, guys, these amounts are getting adjusted here. This amount is getting adjusted in the base amount itself. Noise is coming, yes, noise is coming. Guys, is it manageable or not? Because I don't have any control, guys. I cannot stop this marriage party. So,
Uh, it's manageable, sir. Little bit noise only. It's manageable, I think.
okay.
Yes, it is manageable.
Because like whatever the sound filter is there, that is also can control the, what to say, noise till certain extent only. Okay, so now, so base amount is getting adjusted, right? So here the requirement will be no, the amount, tax amount is going to be calculated, right, on base amount, and separate amount is going to be like here, if you talk about 12%, so 12% on what? Of 1000, so 120, right? So that is going to be calculated only if you have to apply it, if you apply a check mark here, calculate tax on net amount, then what happened? Then it is going to be calculated. So now, so here what is happening, guys? In that case, oh my God, is this here? Just give me a second. Just wait for a second. So one thing, guys, just go to be busy. Be busy. Now what will happen here? So you have to apply a check mark. Apply a check mark here. So here what is happening, guys? Now, so now here 1000 worth of invoice, right, is going to be sent to the customer. Your accounting entry will be now. So customer account, how much, guys? Customer account is going to be debited, right? Debited worth of how much? Customer account is going to be debited worth of 1120, right? 1000 and plus tax amount also that we are going to collect, right? Sales revenue account is going to be credited worth of 1000 only, right? C GST input account is going to be then credited, right? Worth of 60 and again as GST. As GST is going to be credited worth of. So this is what the accounting entry, right? So here customer account debit 1120, right? So here what we have to do now, this time the customer account is going to be, you just close this screen. So here customer account must be 1120, right? And if you press enter, now it is going to be fine. So here if you simulate, then look at here, automatically the system is going to identify this real account. So how this real account is going to be identified? Of course, first of all, the first thing system is going to identify is the tax code, right? So against tax code, so in tax code, tax percentage is there, right? Now, and apart from this, in tax code, other details are also there, guys. Whatever details we have given in tax procedure, those details are going to appear in tax code, right? From tax code, SAP is going to identify the condition type, account key, everything. So this amount is getting calculated on which amount that we have specified in condition type. Right? Amounts, tax amount is getting calculated against base amount, right? And apart from this, against every condition type, we have assigned one account key. If you guys are able to remember, right? So, and against those account key, what we have done, we have assigned the GL account. So this is how SAP is going to trigger the GL accounts. You can post this transaction, guys. Likewise, what is happening? You can calculate. You can see the example of what input tax also from vendor side. Okay. So this is how what is
Sir, the
happening, guys.
class is not being recorded.
No, it's getting recorded, dear. Recording is happening.
Oh, okay, 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 okay. I did
Recording
not see that
is
sign. Okay, sir. Okay, okay.
it's happening. Sometime there may be some kind of this one. It's recording is happening, right? Okay. So what I have done. So simply we have done with the configurations. We have performed the testings, right? Everything is working fine. Now we'll talk about what? We'll talk about deductible versus non-deductible tax. Okay. So shall I proceed further? Is it manageable, guys? Noise is manageable. I don't know how the recordings, what kind of quality will be there of recording, whether this noise is getting recorded or not. Shall I proceed further, guys?
Yes.
Okay. What about other people? The noise is like manageable, right? Noise is there. Uh, how much? Little bit or Zaz is saying good. Good what dear means like manageable, right? Manageable or not manageable? Quality is good. Noise is not there now. It's okay, guys. Then we'll continue. So let me explain this one. Small topic is there, guys. At least I'll explain this one. We have some other things also to see, but again in next session. So here, deductible versus non-deductible tax. Okay. Can anyone explain what is the meaning of non-deductible taxes, guys? Any idea? Any explanations about non-deductible taxes, guys? Okay. Okay. I'll explain. So, guys, first of all, the name itself is saying
So
deductible. Tell me. Tell me. Bhavita, you want to say something? Tell me.
non-deductible will be the home loan or any kind of loan if you have taken liabilities which you already have. So any insurance or any kind of policies if you want to show.
Okay. No, the concept is bit different. Okay. Concept is bit different. What is that? I'll let you know. Look at here. Very simple. Okay. So first of all, deductible means whatever the tax got calculated just now. These all are deductible tax all. Non-deductible tax means what? Look at you. Deductible versus non-deductible. Net tax payable. Okay, so what is the net tax payable, guys? Whatever output means which we have collected from customer, right? Minus input, which is already paid to the vendor, right? So output minus input is going to be, we can say that is our net tax payable, right? But tax authority can also declare a portion of input tax which cannot be set up against output tax. Right? Try to understand. Okay. See, a part of input tax which cannot be set up against output tax. This portion or this part of input tax which cannot be offset against output tax is known as non-deductible tax. Right? Deductible tax means what? See, so here deductible, non-deductible, right? It's all about input tax itself. I'll explain here. Deductible input tax. Input tax which can be offset against output tax, right? Non-deductible input tax means input tax which cannot be offset against output tax. Here in details it is there. Deductible tax, right? A tax already paid to the vendor that can be balanced against your output tax. Very simple concept is there, guys. Right? Now here let's suppose, so we are having vendor and we are having customer, right? So from vendor, whatever tax are getting calculated, that is in the sense whatever we are paying, that is called to the vendor, whatever taxes we are paying, GST I'm talking about indirect taxes, that is called input tax. And customer, output tax. Okay? Now, so generally, if let's suppose, you just make it. So generally what is happening, guys, this much, this one minus this one. So whatever the surplus is there, that is 200, is going to be treated as our total tax payable, right? So it means this complete amount got offset against this amount, right? So that's what I'm saying. It means this one we have already minus from 1200. So this is called we have offset this amount, right? Look at here. So while purchasing of or purchase of material, the tax paid on the purchase item can be availed back from the government. This is called deductible tax. Here the tax is not loaded on material or inventory, guys, right? It is posted to the separate GL account as per configurations, and later stage it is going to be claimed from the tax credit. It is going to be claimed. Okay, in the form of tax credit, and output tax will be adjusted. Now, non-deductible will be looked at here, a tax which is already paid to the vendor, but that cannot be balanced against output tax. So here what is happening, guys, in this case, non-deductible tax, the tax amount will be loaded either on material, whatever like purchase item is there, on that itself it is going to be loaded. Here the company cannot claim this tax amount back from government. Hope you guys are able to understand. See, let's suppose we have purchased a goods worth of 1000 rupees from vendor. On that, we have paid 100 in tax. That is called GST input, right? So, whatever 100 we have paid, that we are going to claim, in the sense, whatever output I have collected from customer side, from that amount, first of all, this 100 which is already paid to the vendor, that I'm going to minus, and then I'm going to pay to the tax department. Saying that I have collected 500 rupees from the customer, out of which this 100 already have paid to the vendor. Directly, indirectly, these all amounts are going to be deposited to the tax department itself, right? So whatever 100 paid to the vendor, that means I have already paid 100, right? So out of 500, now 400 only I am supposed to. This is my liability. I'm liable only, right? So this is called deductible tax. Whatever I have paid to the vendor, that amount is going to be adjusted from the amount which I have collected from customer. In the sense, I'm talking about tax amount. Now, in case of non-deductible, whatever amount I have paid to the vendor, tax amount which I have paid to the vendor, now the tax department is saying that no, this is not, you cannot offset this amount. You cannot get credit of this amount. It means whatever this amount you have paid, not on every item, guys, on certain item. On certain item, let's suppose whatever tax we are paying, okay, that cannot be claimed back. It cannot be adjusted against your output. So that is called non-deductible. That is non-deductible, right? So whatever GST input I said, that is your assets. But what about this non-deductible taxes, guys? Is it your asset or liability? Tell me. So non-deductible is going to be your asset or liability? Any answer? Okay, there is only one answer, right? But always, this is the correct answer itself, most likely. Okay, so whatever this answer is there, that is correct one. It is neither asset nor liability, because whatever you paid, if you cannot claim, you cannot offset against your output, then what is happening, guys? Then that is your expense, right? That is your expense, right? So now look at here. So what is happening? That is going to be loaded on the material itself. Material or whatever the purchase item is there, on that itself it is going to be loaded, right? Now, so here the company cannot claim this amount back from government. Tax payable person, okay, taxable person pay input tax to the vendor and output tax to the tax authority. Okay, so input tax simply we have paid to the vendor, and whatever output tax we have collected, that is also going to be paid to the tax department. Whatever input we have paid, in the sense whatever GST I have paid, that is not going to be claimed because it is non-deductible. One part of input tax, the deductible input tax, can be balanced against output. This is already explained. Another part of non-deductible input tax is excluded from this arrangement. It's okay. So now The question is the configurations for this deductible versus non-deductible, right? So what we have to do, guys, okay, my voice is breaking little bit. What about other people, guys? Voice is breaking?
It's fine now, sir. It was breaking, but it's fine now.
Whenever you guys get any disturbance, immediately you message, okay? So that I'll check my connectivities and all. Okay, immediately you guys just inform me. Okay, so now, so whatever this non-deductible is there, guys, this non-deductible means, okay, so how many condition type we have to create, right? First of all, condition type is required. And I think I have already created here. These are the configurations, guys. Okay, now I'll just do one thing, guys. Okay, now, so we have to create a condition type for this one. And non-deductible, if we talk about, so non-deductible only input, no output, right? Non-deductible means whatever we have paid to the vendor that cannot be adjusted against our output, right? That is non-deductible. So only input. Now here we'll do one thing that I'm going to create here a condition type. So go to OBQ1 and just copy here and ONT non-deductible, press enter. It's already exists, somebody has already created, it's okay. I think, let me check it. This is already created. I don't know if it's created by me or somebody else. So anyway, this one itself I'm going to use, right? So non-deductible. So condition type we have created, right? Now what next? The next one is even account key is also required. Account key is also required, guys. Account key is also required. Now, so go to OB CN, and here there is one already account key given by SAP, that is NVB for non-deductible. Okay, NVB and NVB, that is non-deductible. Okay, now here guys, look at here, non-deductible, how SAP will come to know? So there is a check mark here. Okay, if check mark is applied, then system will be able to understand that this is non-deductible, right? So non-deductible means what will happen, guys? In that case, I'll tell you now. Okay, so now here what will happen, guys? Check out. So this NVB itself, either we can copy this one or else you can use this one also. So you just do one thing. NVB itself I'm going to use. Okay. Do I need to create any GL account, guys? Is there any GL account required for non-deductible? Okay, so I'll tell you. So let's suppose if you receive the invoice from vendor. Okay, so what is happening, guys? Now here, let's suppose any invoice, service or anything. Let's suppose audit fee. Audit fee is going to debit. Worth of how much, guys? 1,000, right? And then let's suppose GST input is going to be debited. Debited or credited, guys? Debited. 120. And then vendor account is going to be credited 1120 rupees. Right? So this time what is happening, guys? This is not required. In non-deductible, why to post it separately in a separate GL? If we are not going to get any, if you cannot claim this account amount itself, right? So it means this is your expense, isn't it? So if this is your expense, then better to load it on the relevant, whatever the relevant GL account is there on that itself, it is going to be loaded, isn't it? So now here, this 120 is supposed to be loaded here itself. Okay. So now what will happen, guys? Now go to /MOB Q3 and here your tax procedure TM33 against this tax procedure. Now, so input, right? It is input. So here you have to add, like let's suppose GST input and here GST output is getting started. Now what is happening, guys? Look at here the steps we have given 100, 200, 300. Why there is a gap in between, guys? If the gaps are there, then only you can insert the additional. If gaps are there, then only we can insert the additional condition type, right? Let's suppose there is any changes in terms of tax procedure, in the sense government has made a small amendment, and for that you need to create a different condition type. So here I have created a condition type. Now here what is happening? Between 400 and 500, in between I have to adjust. It's okay, I'm going to give 401, right? I'll create here, I'll give 401. Condition type NOND. Okay. So this one is getting calculated on which amount, guys? So this is also on base amount itself. It is going to be calculated, right? And here NVV is your account key. Just save it. Okay. Now, if you click on back button, then look at here. It got added here. Okay. Got added here. NVV is the account key. Now, you try to understand this concept, guys. Go to FP60 and post one invoice. Post one invoice here. I think what is the vendor number, guys? Is this the vendor number? Okay. This 481 is also the vendor number, right? Okay. So now, so here what is happening, guys? Let's suppose if you have received, so from vendor side we are receiving the invoice, guys, right? So invoice means now here, okay. Now again, certain concepts are missing from my mind, guys. So I think we have to create a tax code also, right? Let me check it. Okay. So go to FTXP and here input, right? So make it V3 and again GST input, 12% GST input. Here non-deductible and make it V. Press enter, right? This 12% anything, guys, CGST, SGST, IGST, whatever it is, right? Because so now, guys, here CGST, SGST, IGST, whatever it is, if I give you 6% and 6% also, just save it once. And here what is happening, guys? So non-deductible, right? Let me use FB60 once again. So we have received the invoice from vendor, right? Invoice is for overall how much, guys? So 1120, right? Out of which, let's suppose 4001. Audit fee is worth of 1000 only, right? Worth of 1000 itself, isn't it? And here V3 I'm going to select calculate tax. Okay, 4001. That is not relevant for tax. So what we have to do, guys? 4001. I think the correct company code is there or not? Yes, it is there. So FS00. The noise is getting increased here. Let me complete it, guys. Some more thing I wanted to explain here. So office maintenance, right? It's okay. So this one itself, make it minus only input tax allowed. If any GL, let's suppose, if any, like for this GL, let's suppose if any dedicated tax code is there, that only this tax code in the sense 12% IGST only can be used, right? So in that case, you can assign the tax code also. Here you'll be having options. Whatever tax code I have created, look at here. Whatever tax code I have created, these tax codes are appearing here, right? So even if any dedicated tax code is there, that also can be assigned. Or else simply minus plus we are using. Save it. So here, press enter now. Everything is fine. So here balance 120, SAP is saying that 120, here itself 150 you have to give. Okay. Why 120 guys? Here V3, press enter. Okay. Now what is happening guys? Why it is like that? No. Am I making any mistake guys? If I give you a somewhere something is there guys. What mistake I'm doing? 12%, right? Do I need to give percentage here or no? Given V3. So are we having calculate tax on net amount? It's okay. So yes, now it is correct. Okay, now it is correct. So generally what is happening guys, invoice amount we are going to receive from vendor. So vendor will say that audit fee amount is 1000, right? And tax will be 120, right? So final amount payable to the vendor is 1120 that we are going to specify here. And whatever the original amount is this 1000 only, right? But if you simulate here, no, this should not be calculated, right? This should not be calculated, guys. Why it is getting calculated? Oh, I have made a mistake. Here we are having, no? Here 12%. This one deactivate, and then save it. My mind is not working, guys, because of this huge noise here. You guys are getting very less noise because of this sound filter, but here it's too much. So now it is going to work out. It is distracting the mind. And here 1000, let's suppose. Here V3, calculate, and here let's suppose V3. Okay. And if you simulate here, then now look at here, guys. Office maintenance is only, generally it was supposed to be audit fee, but anyway, no issues. This is also expense deal. That. So now here, what is happening, guys? So whatever this tax amount is there, it is loaded on the expense GL, right? It is not going to be posted to separate GL account. Why? Because if you are unable to, like let's suppose, what is the use of posting this to a different GL account if we are unable to, in the sense GST input and all, because we are not going to offset this. We are not going to claim this amount, right? So this become our expense, isn't it? So what is happening, guys? It is going to be added to the same expense GL or material GL or inventory GL, whatever it is. It is going to be added to that particular line item itself, right? So that is why a separate ledger is not coming into picture, and generally for non-deductible, even separate ledger we have not created, right? So how SAP will come to know that the respective line item itself is going to be adjusted with this tax amount? So I have already, when we have created the account key, guys, right? NVV I have used, right? Even if you are going to copy this NVV, there also what is happening? There was a checkbox called non-deductible. Non-deductible means it means no need to post it to a separate GL account. Simply it is going to be, in the sense respective line item itself is going to be adjusted. So what is the concept behind this non-deductible, deductible versus non-deductible? Deductible means the part of like input tax which can be adjusted against output, right? That is your deductible. And whatever the input tax which cannot be adjusted against output, right? We cannot claim, we cannot offset the input tax which cannot be offset against output tax, that is called non-deductible. So deductible input tax is your asset, but non-deductible input tax is your expense, right? Deductible input tax can, and it not can be, it must be posted to a separate GL, so that we will come to know that this much is our input which we are supposed to adjust against output. Non-deductible, no need to post to a separate ledger. Why? Because this is your expense, right? So that is going to be added to the respective line item itself. Okay. So this is the concept about deductible and non-deductible. There is one more thing I have to add here, guys, but now since noise is too much, so I'll stop the session here itself.